you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there.
Have you ever wondered why one of the most successful investors of all time, Warren Buffett, remains skeptical about cryptocurrencies? Yet, there are many other prominent investors who are bullish about it. Today, we're going to dive deep into his intriguing perspective. Regardless of where you stand on the cryptocurrency debate, this video is a must-watch. It offers a fresh perspective, highlighting the diversity of thought in the world of finance and investment. We're in an exciting era where digital innovations are transforming various aspects of our lives, including how we transact and store value. And one of them is cryptocurrencies, the new kids on the financial block. As these digital assets continue to evolve and make waves in the financial world, they've garnered both ardent supporters and staunch skeptics. And when we talk about skeptics, who better to discuss than the investment guru himself, Warren Buffett? Warren Buffett has not minced words when expressing his doubts about cryptocurrencies. His statement that Bitcoin is probably rat poison squared raised quite a few eyebrows. But why is he so skeptical? Well, Buffett's skepticism can be traced back to his investment philosophy.
Intrinsic value has come to be equated with, and I think quite properly, with what you might call private business value.
Firstly, Buffett believes in the concept of intrinsic value. He has a value-oriented approach to investing, which means he only invests in assets that he believes have intrinsic value. Intrinsic value typically comes from an asset's ability to produce something or generate earnings. Cryptocurrencies, such as Bitcoin, don't produce anything, and therefore, according to Buffett, don't have intrinsic value.
The financial statements will tell me the information that's useful to me in making a judgment about what those future financial statements are going to look like.
Secondly, Buffett loves income-generating assets, stocks that pay dividends, bonds that pay interest, real estate that pays rent. These are the types of investments that Buffett prefers. Cryptocurrencies, however, do not provide regular income to their holders, which puts them out of Buffett's comfort zone.
We don't have to know what cocoa beans are going to do or cryptocurrencies. We just have to focus on 8 or 10 stocks businesses, basically, that we think are decent businesses.
Buffett has consistently warned against investing in assets that are highly speculative. He believes that the value of cryptocurrencies is largely driven by speculation and fear of missing out, rather than by their utility as a medium of exchange or store of value. Next, Buffett is wary of the lack of regulation in the crypto space. The absence of a central authority overseeing cryptocurrencies makes them highly volatile and susceptible to manipulation, in his view. Furthermore, Buffett is known for his philosophy of investing only in what he understands. The complex technology behind cryptocurrencies can be quite difficult to grasp. Buffett himself has admitted that he does not understand Bitcoin enough to invest in it. Lastly, Buffett has raised concerns about the potential for illicit use of cryptocurrencies. Their somewhat anonymous nature can make them attractive for illegal activities, a risk that Buffett is not willing to take. But the world of investment isn't a monolith, and there are other heavyweight investors who have a completely different view, as is Michael Saylor.
My personal view, and the company's view, is Bitcoin is the winner.
Saylor, among others, is a firm believer in the potential of cryptocurrencies, especially Bitcoin. He sees it as digital gold, a new kind of asset that combines the store of value properties of gold with the portability and transferability of digital information. For Saylor and his fellow optimists, the value of Bitcoin comes from its scarcity. There will only ever be 21 million Bitcoins, its decentralized nature, and its potential to disrupt traditional finance. Moreover, they argue that Bitcoin's volatility is a feature, not a bug, reflecting its early-stage growth and huge potential. So, who's got it right in this debate? Are Bitcoin and other cryptocurrencies paving the way for a huge change, or are they just a risky gamble that's about to go wrong? Well, the truth is, no one can say for sure. However, one thing is certain. Whether you agree more with Buffett's careful approach or Saylor's excited stance largely depends on whose principles resonate with you more.
The only reason that a casual investor wouldn't start to shift their allocation of savings from commercial real estate to Bitcoin is they don't understand Bitcoin.
Before we wrap up, let's remember one important thing. Investing isn't about following trends or other investors blindly. It's about understanding the fundamentals, being aware of the risks, and making informed decisions. So whether it's traditional stocks or cryptocurrencies, make sure you do your due diligence. That's all for today, folks. If you found this video insightful and want to stay updated with the latest in the world of finance, hit the subscribe button and turn on notifications so you won't miss our next videos. And remember, invest wisely and stay informed.